Welcome, Louisa. How are you?
I'm very good, thank you. How are you?
Not bad. Welcome to the Women in Finance podcast series. We're delighted to have you here.
Thank you for inviting me.
So that our audience get to know you better, it would be great for them to know who you are, you know, your business, and then we can go from there.
Yeah, definitely. My name's Louisa Klouda. I am 31 years old. I am the founder of Fenchurch Legal. I grew up in Corfu, in Greece, on a small island, and then I left at 18 to go to university in Newcastle, up north here in the UK. A bit of a climate change and shock to the system. But yeah, I studied maths and economics in Newcastle University, and then I moved down to London to enter the finance world. So that's how I ended up here in London in finance. And I worked in the City of London in a kind of wealth management corporate broking firm for quite a few years. And then I went off to set up Fenchurch Legal about 6 years ago now.
Oh, wow. Fascinating. Now, what drew you to the world of finance? I know you sort of said you left Corfu and enrolled, but what sort of made you enter finance? When I say finance, I mean, you've done a degree that obviously led you to a career in finance.
Yeah, definitely. I always loved numbers. I always that kind of a geek in the maths in the maths class that was good at it, liked it, enjoyed it, the kind of teacher's pet, if you like. So it definitely kind of stemmed from there. I took economics as a kind of module at school, and did my A-level in it. And I was exploring kind of different options or courses available, and I found a course that kind of combined maths, which is a very solid kind of baseline course for anybody, a degree for anybody to have, and economics. So I didn't know exactly what I wanted to do, but I knew that I loved numbers, and kind of finance is one of the core things that you go into off the back of it. But I also remember myself younger watching TV and seeing all the stock market indexes, on the bottom that come across, and going, oh, I really love those. I'd love to become a trader or a stock trader or something. So there was definitely an element in the background there that kind of led me to finance. And I think having done the course solidified that I enjoyed the application of the numbers into something interesting. I think the core reason for going into finance or the investment world rather than just finance per se was I was part of the Finance Society and the Investment Society of the university. And in our second year, they brought us down to London and did like a tour of all the different finance industries that you could go and work in, or types of firms. And I went to a kind of prop trading firm and did an internship over the summer, and it just exposed me to this massive world that was incredibly interesting, and I still love today.
Which is great. Now, was there a specific moment or experience that drew you to becoming a founder and founding this Fenchurch Legal?
Yeah, definitely. I think the love and passion for working hard and creating something for yourself, and ultimately wanting to not only work for yourself, but build something that you can say, I kind of built that and achieved that. And it was within the last year, I was working in my old job and ended up founding Fenchurch. This is like, I think I have the confidence to do this myself, and I'd love to see if I can. Can I achieve things on my own? So that was kind of pushed me and led me to go.
Very impressive, because I don't think I know very many young founders. I mean, you say you're 31 now. You founded the business 6 years ago. A lot of the women, in particular women I know, you hear about the average age of a founder, which is sort of 40 plus. So that's incredibly impressive, right? In your mid-20s to be like, I'm going to go and found a company.
Yeah, it is. And I am very fortunate to be in this position now and to say that I've managed to do it. I think I had very supporting people around me, which makes a massive difference. People believing you, supporting you, pushing you going to move forward, and then ultimately as well a team. Once you build that company and build a team that support you around it. So I guess taking that leap, that step, and people supporting you and backing you is really important. And I am of the belief that most people that put their mind to it can actually achieve it.
Yeah. But was there a moment, because obviously, you're in your mid-20s, and sort of most people in that age bracket have different plans. They sort of, want a paycheck, but then maybe want to sort of travel part of it, or go out and party, because obviously, setting up your own thing is quite daunting. Not everyone has that confidence.
Yeah.
Was there a particular reason? Was it that you didn't enjoy working for others, or did you think that you had ideas that you weren't able to apply in your current environments? What was it that motivated you at that age to sort of, pivot?
Yeah, it was the commitment for some financial backing to start it that kind of led me to it. I always had the idea in the background.
Okay.
And it was the financial backing that kind of solidified that okay, if I've got the money and I've got the idea and the willingness and to do it and commit to the work to it, then I have to do it. And also I was young. I didn't have a mortgage or anything. I just had rent to pay. I didn't have any dependents, and I can afford to graft now. I can put the time and effort in. I've not got anybody dependent on me. If it doesn't work out, we'll just start again, or I'll go and find another job. Like if I'm going to take a risk, it's at that age that you want to do it. Like if you're older and you have dependables, I think unless you are very, I guess, comfortable financially, it's the biggest, I think, risk a lot of people think about.
Yeah. And in doing all this, what personal values do you think have guided you when you first decided? Were there any sort of personal beliefs, personal values that led you to this?
Discipline and hard work. Okay. I don't think it's any more complicated than that. You have to be willing to graft and put the hard work in that not everybody wants to do. It's the long days. It's the holidays that you can never have without picking the phone up. It's what happens at the end of the month if you can't make payroll, if you do have staff. It's the stress management, discipline and hard work.
So not rocket science at all.
No. It helps, but it's not the only reason.
Now, if we move on to just, talking about your company, what was the initial idea behind this litigation finance company, and how did it evolve as a business from when you started till today?
Yeah, definitely. Litigation finance is a big industry, and there's quite a few people doing it out there. But there wasn't anybody in the market that kind of combined litigation finance as a kind of private credit opportunity. So what I wanted to do, my background was very much packaging and fundraising for lenders. So I had a very good and strong understanding of the lending industry, of secured lending, private debt, private credit, and fundraising. So that was kind of my niche. And then litigation finance was a concept that was becoming more and more kind of popular in the investment world, come across it quite a lot, found it very fascinating, combines law and finance, which is two of my kind of favorite industries, if you like. So I thought, is there a spin that we can put on litigation finance to kind of turn it into a private credit product? So my idea behind it was taking one thing, structuring it differently, and kind of developing a model that's not something that really is out there in the market available for investors.
And so we talk about your career and your liking for numbers and how it led you to the economics and maths degree with a career in finance. We haven't really touched on the law side of things, the interest of combining the legal setup with this financial wrapper, which is, as you call it, litigation finance. So could we just touch on the law part? How did that come into the picture?
There wasn't a specific kind of reason, if you like. It was more, I had just come across that industry.
Got it.
And I found it very fascinating. And I think if we go into the detail, you understand why I found it so fascinating, because it's like, with any type of lending, you lend against an asset. The asset, if it's a tangible asset, it's very clear. It's got a very kind of clear value. It's boring. But if you're investing in a case, it starts to kind of become a bit more interesting. You start to think about prospects, you start to think about processes, you start to think about people managing that. So there's a niche element to it that you can't just easily invest and forget about it. There's a lot more to it. Exactly. Or value. And I think I'm definitely someone that doesn't enjoy or like boring things.
Correct.
And I'm also someone who, when I get interested in something, I like to know everything about it. I like to put a lot of time and effort into understanding why it happens, what happens, and the kind of detail behind it. So I just found it fascinating. And if I could create something that wasn't really in the market, in a niche area that I had a USP in, I just thought that as a proposition to both clients and investors would be great.
How did you commit to your first investor?
The initial backing was more of a mutual discussion, but the first kind of external investor that come into the business was a year in. So we had a year of track record, which is very short for external investors. And I remember one of the kind of second or third phone calls that we had was like, you don't even had audited accounts yet. I was like, oh no. But we did. We ended up getting them over the line. I think we managed to get our first audit delivered in about 3.5 months, which is insanely fast if you know anything about auditors. And we managed to convince them about our business model, about our track record, even though it was very limited. Like I think a very, very small part of our portfolio had actually done a full cycle at that point. So the data was very limited. But we kind of got the green light from the auditors. We got the green light from the track record. They were very happy with our company setup, our team, and our story. But I think they believed in us as a company, which I think
and in
many, which I think is really important to a lot of investors. A lot of people say, like, we believe in the person, we believe in not just the product or the company. So I think it was, I remember it like it was yesterday. It was like an amazing feeling of achievement. And we raised quite a lot of money with them. And that's what really kind of took our business to the next level.
And what were your biggest challenges in the early days?
Biggest challenges? I think that the unknown of business. I think now, having 6 years experience, if I was to start again, I would do so many things differently. But hindsight is a beautiful thing.
Of course.
You learn from your mistakes or from things that happen, and you become better and do things more efficiently. I probably would have hired staff earlier because I did a lot myself, especially for the first few years. We were a very kind of close-knit team. So I would definitely hire staff earlier. But I think challenges, it's in our industry as well, it's knowing more about the industry. So every year we know more, our team knows more, we know more people in the industry, and that knowledge is gold in the investment world. The more you know, the more you can plan, the better your performance.
Better network. The ecosystem, getting your grips on all of that. If we move on from that, was there any point in the first few years where you thought the business might fail? Did you entertain that thought? Or
I have plenty of times. I think in the investment world, as you know, it's a bit more complicated than a normal trading business where it's more linear, the performance. Like if we have a really big default, or if a big investor pulls out, like that has such a big knock-on effect on everything, which undoubtedly puts you under that kind of thought process of, okay, are we going to make it here? There's been a couple of moments where we've had, I guess, some not so great things happen, but luckily we've turned things around, and we've taken the learnings and turned them into positives, and trying to fix what went wrong and make sure that it doesn't happen again. And also diversified. Like one of the moments was one investor decided to kind of not continue, which was totally down to their circumstances, not ours. But that obviously left us exposed. So it's one of those situations where, okay, I don't want to rely on one. Yeah. I want to have multiple. So if that happens again, we're not in a situation where we're left without anything.
Yeah, no, makes sense. And talk us through your first major case or investment. At that point where you would realize that the model would work for you?
Our first client, because we don't have loads of clients. We have a few clients, but lots of underlying cases.
Got it.
So I think the first client will always be the one that kind of taught us so much. Sure. Because it's your little guinea pig where you're asking more questions to them rather than the other way around. And that definitely gave me a lot of the core knowledge that I needed to then go away and do that better with other people. And I think understanding the business, the claims industry, understanding how these legal cases work and everything was really, really important. So I think the first kind of 6 to 12 months of the business, we only had one client, and we focused on them, helped them grow, and they've tripled in size since we started funding them. So it's also really nice to look back and say, okay, we helped them achieve
their goals. Okay. Now, if we can just go back a little bit in terms of, for listeners who are unfamiliar with litigation finance, could you please explain it to all of us in simple terms?
Yes, definitely. It's basically the process of funding a legal case on behalf of somebody because they can't afford to run the case themselves. So these law firms that we fund have lots of different legal cases that they run on behalf of their clients. Their clients can't necessarily afford to pay all the costs for the lawyers, but also the disbursements attached to a case. So that's where we come in. The law firms take on the case. We fund the case itself. They run it. And then when the case settles at the end, that's how we get paid back. And hopefully, if it's successful, the end claimant gets back their damages. The law firm gets their fees. We get our money back plus our interest. And it's a kind of win-win scenario for situations.
Everyone. And why do you think litigation finance plays such an important role in access to justice? Because obviously there's a claimant on the other end.
Yeah, exactly. It's allowing people access to justice that wouldn't be able to afford it otherwise. Yeah. So you've got people that want to claim but can't because they can't afford to do it. Yeah. Like, litigation is such an expensive process. Absolutely. And it could take years. Yeah. So it's not like you're fronting a few £1,000 and then you'll get it back in 6 weeks' time.
Doesn't happen.
Some cases could take 2-3 years to settle, and people can't always afford the upfront and ongoing capital. So it's given people the ability to claim when they couldn't afford it otherwise.
And what misconceptions do you think people have when it comes to litigation finance? Are there any? And if so, what do you think there might be?
There's two kind of sides to litigation finance, two kind of big sectors. There's the big cases that you probably hear about in the news, the big court cases with two big people fighting against each other, and those could take years to settle, and the settlements are huge, multi-millions if not billions. And then you have the other side of litigation finance that is the kind of small value claims at a high volume, which is end consumers, the kind of normal day-to-day person trying to claim some money back through redress schemes or because they've been wronged in some way. I think when people hear litigation finance, they always think it comes with massive risk, massive returns,
right,
which is to some extent correct on the one side of the market, which is the big cases. But we work in the other side of the market, which is the kind of small value, high volume claims. And the way that we package it all, we mitigate that risk and any downside. So litigation finance normally in people's minds equals big risk or gambling, binary results.
Got it.
But that's not all that is there. There's a lot more to it, and a lot, I guess, other avenues that you can explore within litigation finance that eliminate those kind of big gamble conceptions.
And how do you evaluate which cases are worth funding? How does that process work?
So we tend to underwrite case types and law firms rather than just an underlying case because of the nature of what we do. Like the bigger case stuff, your funder will underwrite the case, like legal opinions will be really important. The case type as a whole, we're happy with the case law, we're happy with the legal precedent set in the market. Then as long as there's a good operating law firm handling that case, we will fund it. So our case opinions tend to be like by counsel or a barrister at the initiation of that case type or when we start funding it to get comfortable that there is, I guess, strong enough legal precedent and case law that supports the settlement of a case.
Got it.
And then it's down to the individual criteria
that the law firm will follow.
Exactly.
And do you look at their success rate? So you look at, you do due diligence them and look at the past case laws and success, and so that all is taken into account.
Exactly. That's part of our kind of firm level due diligence that we do and underwriting. We don't expect 100% success, of course, but we expect above 80%. And as long as you can maintain levels above that, it's sustainable.
Got it. And so what would you say are the key risks in litigation finance compared to more traditional investments?
I think it's understanding the asset. And that's why I think I find it so fascinating and niche, and the experience that we've built over the years is such a kind of core thing to our business, because monitoring it and valuing it is very, very hard. So someone, if they didn't know what they was looking for or looking at, then that could pose a huge risk. So somebody going blind, lending into a law firm, I'd say run a mile. But we've built structures to make sure that everything that we do, everybody we lend to is monitored. So from day one, we don't lose track of it. We know exactly what's going on. And the risk is you leave them to it, they don't run the case properly, and bad things happen at the end of it. So understanding how that works is really important, and then putting other risk mitigants in place that help support the risk as well.
And so what frameworks do you use when making high stake investment decisions in some of these legal cases? I know you talked about sort of the law firm, the case precedent, et cetera. Are there any other frameworks that you would consider?
Our underwriting framework, if you like, is huge. It looks at so many different things because it starts from case type to how they process it, to who they've got processing it, to what systems they're using, what criteria they're using,
so
what insurance
very
they've
detailed.
got. So it takes weeks to do.
And how long would a typical due diligence process take if you were to onboard a new case type, a new law firm?
So a new law firm on board, in which was typically include everything, can take up to 12 weeks.
Okay. Okay.
8 to 12
It
as
just
a range. Yeah.
Okay. Okay. And how do you balance financial returns with the ethical considerations? Because obviously some of these underlying cases touch on, some of these cases.
Yeah, definitely. I mean, I would say that all of the cases that we fund have a consumer element within it that we like and support, and are very happy to be backing. Of it. I think if something come across our desk that didn't fit our ethical, I guess, criteria, we wouldn't fund it. It's very simple. I wouldn't personally cross that line, and I don't think my investment committee would cross that line.
Are there any examples we could have of what you wouldn't touch?
Well, we've never come across anything that's ever really brought that crescent to light. And most of the consumer claims are very pro-consumer.
Got it. There's nothing that would make you.
Yeah.
Because you are dealing with, as you say, consumer claims. Yeah. Okay. What has been the most surprising case or outcome your company has ever been involved in? Any examples?
I think, the case type that will always be closest to my heart, if you like, is the housing disrepair cases, because it's supporting people living in terrible housing conditions across the UK, and the lack of kind of support that they get from the council, or the lack of consideration by them, is appalling.
Yeah.
And the fact that we're able to not only get those disrepairs fixed for them, or not us directly, but indirectly helping that process, plus get them damages on top for not having them completed when they should have been, is definitely something that I will always be proud of, that we're able to support that process.
Yeah. Great. And what's the difficult decision you've ever had to make as a founder so far?
I think enforcing security. I think as a lender within private debt, I think you have to always be mindful of, at the end of the day, we are lending money and we need to get it back. And profit and financial return isn't always the key or the first thing on my mind. But if we've borrowed money from investors and have to return it back to them, then we have to keep that in mind. And obviously, if there's situations where there's defaults and people are using the money in ways that they shouldn't be, or just not generating the return that they should be, then you have to make the tough decisions of having those tough conversations and enforcing security, which then obviously has a knock-on effect on so many other things that are just decisions that you don't want to have to make. Or impact, but it's part of the world that we live in and part of our industry, and it has to be done.
Yeah. Now, and moving on, has litigation finance evolved? Has it evolved? And if so, how?
Yeah, definitely. I think the last probably 5 to 7 years, I think it's become an asset class that so many more people are looking at compared to before. UK, Australia, and quite a lot in Europe now are using it as part of their kind of asset allocation within private debt strategies, which wasn't something that we used to see before. I think it's more talked about in the investment world. When I first started, there was very few people that I spoke to that knew what it was or have heard of it. Whereas now I'm seeing people, we've looked at that before. We've heard of that company. Whereas it wasn't the case. I think it's evolving in the sense that a lot more people know about it, and that it's becoming such a bigger part of alternative investments and private debt strategies.
Okay. What trends do you think are shaping the future of this industry? Are there any prominent trends that you have observed?
Yeah, I think that the social impact and element to a lot of the cases is playing a big part. I think there's a lot of, asset managers that are looking for that social element as part of their portfolio construction. which I think can kind of be aided and supported by some of the stuff in the industry. Some of the big court cases as well have definitely given the litigation finance element a bit of good PR.
Yes.
Where people have heard about it before. And I think again that the inclusion into private debt is a trend that we're seeing, which wasn't one before.
Yeah, I mean, if we also talk about private debt, that's only been around since post global financial crisis. So, but it's good news. It's good news for a lot of the esoteric debt strategies to be considered as part of that portfolio construction. How do you think technology or data are changing the way litigation funding is carried out, and what impact that's having?
Massively, I think across any investment strategy or industry at the moment, tech is obviously playing a big part of it. I think for us specifically, we're doing super high volume claims.
Right.
So naturally, we need tech to manage it, whether that's just managing the loans, whether it's analysing cases, statuses, progress, performance, analysing loan data and loan performance. It's something that we need and is a must for us to run our day-to-day business. So I think for efficiency and for better understanding and underwriting, you need to use it.
Use that. Yeah, that's true. What advice would you give someone, somebody, I don't know, could be in their 20s, maybe 30s, but what advice would you give someone who wants to start a company today?
Just do it. Like, what's the worst that can happen?
Fair enough.
You can try it. If it's not for you, or if you don't succeed, then you go back to having a job. But imagine the good things that could come off the back of what if it does work, and what if you do make a really successful company. I think you've got to be willing to work really hard, and you've got to sacrifice a lot of personal time and probably money to begin with to do it. I think you want to be as organized and committed and disciplined as possible to have the best shot at it. But unless you're someone that's really, really risk averse and very kind of enjoy being in your comfort zone, I think there's the downside is time and money. So if you can afford to spare a bit of that aside to potentially give you a massive upside in your future and career, it's just personally a risk worth taking.
Now, earlier on, you touched on that, you would do quite a few things differently. Looking back, could we talk about a thing or two of what you would have done differently had you been setting up the company today?
Yeah, I think I'd probably put a lot more systems and controls and processes and structures in place, because I think when you're starting a business, not having done it before, there's so many moving parts that you don't even know what you don't know. Like looking back, like you've got things like just website and promotional material and like what we look side from the outside world and then you've got your kind of boring processes and setups, and then you've got finance and budgeting and cash flowing, and it's just all these elements that like to me now just seem common sense, but to me 6 years ago didn't. And working in a company, you've got your HR, you've got your finance, you've got your legal, and every time you got a question, you just go there and things happen and you just assume that they happen, but they don't. There's people in the background doing things that planned it and put them in place. So I think seek as much advice as you can, read and learn as much as you can, ask questions, take courses to try and educate yourself more, whether that's on a business setup or on in your industry.
Right.
And ask for the support. Most people are willing to give it.
We're getting towards the end of it now. What motivates you today? That obviously, when 6 years ago you were motivated to set up a business and run the company, has your motivation changed a bit? Same thing motivates you today that did 6 years ago, or has that changed?
I think that the motivation that has always driven me is kind of achieving and building something that I can look back and be really proud of. And I think then it was, can I do it, or what can I do? And like, because I was still in that kind of very new building era, but now we've got kind of a solid company, and I think my team is what I love looking kind of back to, and like we've built a great team, and they're fully invested and part of the business. And I think I want to do better for them too, because they're giving kind of their everything for the company. And yes, of course, like better financial returns are important, or other things, achieving other things. But it's also, I have a team that love working in the company, enjoy being part of it, and the culture and so on. And I think like making them proud as well, and having a great environment to work in is equally as important.
One piece of advice for people who are going to be listening to this podcast, from just looking back at your career so far, if you had to give one.
Yeah, I think if it was directed at your audience within the group,
yes,
the Women in Finance group is an initiative that I love the idea about. And I think when we first met, me and Laura come away from that meeting buzzing. We love the initiative. We love what you're trying to do. And I think there's, I guess, lack of, not necessarily opportunities, but that kind of open and comfort space for women to participate in things. And I was very fortunate that I had so many people support me in my journey today, and I would be nowhere without them. So if we could give that same support back to people, I'd love to do it. So if the one piece of advice I would give is join the group and come here to support, for us to support you. And if you want to take that leap of setting up a business, then you need to find the right people to kind of help push you forward, because it's not an easy thing to do. I'm not going to sit here and say there's not been days where I'm pulling my hair out. It's horrible some days, but other days it's amazing.
Yeah.
But and you reap the rewards kind of across so many different areas. But being part of a group that can support you and help push you forward is incredibly powerful, and you should definitely take the opportunity.
Thank you so much. That is wonderful. Thank you very much for doing this.
Thanks for having me. It's been lovely.
You're very welcome. Thank you so much.